What is up, guys? Welcome back to another video, and today I'm going to ask the question, is Doordash a buy or is it a sell? Stick around. What is up, guys? Welcome back to my channel. My name's Matt, and in this channel, all we do is invest $20 each and every week, and we watch it grow. This week, we asked the question, is Doordash a buy? Is it a sell? Your thoughts on it, my thoughts on it, all that good stuff. Let's go ahead and hop into it. Real quick though, guys, before we do that, do me a huge favor as always, smash that like button if you like my content. Don't forget to subscribe to my channel, and as always, leave a comment down below. At the end of this video, let me know what your thoughts are. If you think Doordash is a buy, if you think it's a sell, if you want to wait, all that good stuff. So let's hop into it. So with Doordash, with anything we do, we always want to look at the numbers first. So when we pull up Doordash, we can see that the valuation over the last 3 years has went from $7 billion in 2018, $13 billion in 2019, all the way to $16 billion in 2020. And then once Doordash was on the market, it shot up all the way to $32 billion. Guys, that is unbelievable. And what's crazy is I actually used to Doordash, and I still do on occasion. I am quote unquote a dasher, as they call it. And it can be a wonderful side gig, or it can be a horrific position that does nothing but trade equity in your car for fast cash now, more or less. Again, however you treat it. I drive a little Hyundai Sonata. It's got like 150,000 miles on it. Gets great gas mileage, and I can't complain when it comes to that. So again, my equity in my car, there's not a lot of equity to trade, so I'm able to run this bad boy right into the ground while getting that money, more or less. You know, when Doordash was first talking about IPOing, and when they were first talking about getting out there, there was talks of them being around the $60 to $80 a share mark. Then it shot all the way up to $90 a share, $95, before shooting up all the way to $182 on its opening night. So when we look at it, I mean, you can see it actually IPO'd at $163.81, went all the way up to $189.50, and then look at it today. It's at $158.50. So it's already been all over the place. When we look at the month, the year, obviously 5 year, all that good stuff, we can see now the market cap's at $50.83 billion. The 52-week high was actually at $195.50, and then the 52-week low at $151.20. So they actually took a pretty big hit today, which you would have thought, you know, with the talks of the vaccine coming out, you would think they would go up with the market. But again, if the vaccine comes out, that means more people are going to go out to eat, which would mean less for Doordash. I don't know. That's kind of how I would look at it, I guess. But, you know, we try and make guesses all the time, but you never can guess right one way or the other. So, you know, that's where it IPO'd at. You know, Doordash was actually founded in 2013, and it during COVID, it has become such a pivotal asset that, you know, people get home from work, or they're working from home and maybe they don't want to cook, so they just put in an order for Doordash, and Doordash has slowly taken over more and more of the market. And again, earlier this year, Doordash had reported roughly $1.9 billion in revenue, which is up compared to $587 million during the same time last year. And during this time that Doordash has had such an increase in revenue, they've actually reduced their losses to $149 million. Compared to last year, their losses were about $533 million. So they've been able to get closer to a profit, although $149 million loss is still significant. You know, that's just something to take away from it, but they've been able to slowly reduce those costs. And if you know anything about, you know, Amazon, they were kind of similar. You know, they were accumulating large losses, and just over time, they were able to perfect their process, and in doing so, you know, gaining those small margins. And that's kind of what Doordash is looking to do over time. So what I kind of did is I put together kind of a list of a few positives and a few negatives. A few positives are that DoorDash has been, the majority of the delivery services, again, they're hosting or they have gained to about 45 to 50% of the market share between Grubhub, Uber Eats. I'm trying to think who else is out there. Postmates, but I think, they were bought up by Grubhub, all that good stuff. But, again, another positive is DoorDash has 1.9 billion in revenue, and that's only going to continue to go up. I think as DoorDash starts to gain more and more of the market, I could see DoorDash sitting at about the same revenue, next year at this time. Number 3, DoorDash is everywhere. I mean, you see them on commercials, you see them online. When you go into a restaurant, you can see their little logo on the door when they're coming in. They have their card set up at the front. So, I mean, they're everywhere. Commercials, online, you name it, it's everywhere. Number 4, they actually have the potential to continue to grow, again, decimating Uber Eats and Grubhub. So they're going to just keep gaining that market share. And then, of course, number 5, they have such strong momentum that year over year, I mean, even if, again, they do what they did this year in sales, I think they're going to continue to perfect their process. I know they're starting to add like city fees depending on what city you're in. So DoorDash is going to keep kind of nickel and diming these people along the way, and they're going to continue to keep getting those sales. They're going to keep that momentum going. They're cruising right now, and on paper looks to be a buy. Now when we switch over to a few downfalls, again, they have yet to be profitable. So this is a company that hasn't made a single dollar. So are you really willing to put your money into something that is yet to be profitable? Again, to each their own. Number 2, continued poor service on both ends, not only with Dashers, but with customers. I mean, how many times have you seen it online where someone hasn't received their order or they're missing something and they have to call into customer service? I know that there was a glitch in the system where you could continue to say items were missing, and instead of DoorDash refunding you, they would just give you credit. So you could keep that perpetually going and you could just keep creating accounts. Again, I think they fixed it. Don't hold me to it, but that's something that I had a buddy that was doing all the time. Not moral at all, but maybe it helped them fix their process, and maybe he's the reason why they've lost $149 million today. Just kidding, but seriously. Yeah, so the continued poor customer service on the workers' end, I know as a Dasher, again, when there were continued outages where you go to pick up the food and the system drops and you can't find the address, or the address is out of your zone. I mean, it can be a nightmare for anybody just starting out. I think I have just under 1,000 deliveries myself, so it's nothing to brag about, but I knew the area and I was able to just go from there. Number 3, so the amount of commission that DoorDash takes from restaurants is completely horrendous. I mean, it cuts into the restaurant's bottom line, 20 to 30%. I mean, you're talking taking these margins of these restaurants that were operating probably in the 10 to 15% range and just cutting them completely to where it's now a loss leader. And yeah, the restaurants are getting that revenue, but it's cutting into them. And now more than ever, we need to see those small businesses and small restaurants thrive and survive. Number 4, their valuation is close to $32 billion now. So we saw a company that has just been driven up by a lot of investors that are just, they see DoorDash as the IPO and they just want to start throwing their money at it. And this valuation is just going to come crumbling down, in my opinion. And then, of course, last but not least, the need for continual growth, or that's going to be it. They're going to either have to continue to grow or they're going to have to keep raising capital to basically just tread water. That's kind of self-explanatory in itself. So they either need to grow or they die. And again, you could say that about any company. You're either growing or you're dying. That's what it comes down to. So basically it comes down to, what am I doing? I'm on the fence. I like the growth opportunity, but I look at Grubhub and what it did, it was at $175 before, and now it's at what, 70, 75? I think for now, I'm neither a buy nor a sell, and I just kind of want to wait and kind of see. I think if DoorDash drops down to what it was supposed to be at, in the 80 to 90 bucks, I'm going to jump in. But until then, I'm just going to hang out and watch. That's just kind of been my opinion, guys. Let me know down in the comments what your thoughts are on DoorDash. Thanks for watching. Remember to subscribe if you have not yet. We'll see you guys next week. Stay safe, stay warm, take care.